chop and churn yesterday. While largely we consolidated, it was a narrow range, but it sure did have its fair share of jagged edges, as you can see on your screens yesterday. Unable to hold that 25K mark, however, there was a lot of tug of war between various sectors, which of course we're going to be talking about in just a short while from now. Of course, what remains to be seen is that FIIs have been consistent sellers, and so far this month, nearly half of the month already done for October, it's been quite a massive figure. But what about the global setup this morning? And the US futures have sort of eased after that upbeat session that investors did have, assessing all the earnings and the macro data points. We did manage to see a bit of a decent handover for us. But yeah, like you said, Nikunj, yesterday, it's a bit of a time pass that's happening. And that seems to be true for even the globe.
See, Asha, there's a marked distinction in India and a marked distinction in global markets, because global markets in a sense have shrugged off what's happening in the world, because you made a new high, and you made a new high along with stocks which in a sense have been the market leaders. So while it is more of the same for the global markets, I think it is evident in the way how Dow has closed. It is evident in the way how the dollar index now seems to be settling in and around that 103, 104 mark. Crude, the direction is down below 80 but above 75. Yields above 4, but directionally they are headed lower. They are certainly not at 4.5. So the setting on the table perhaps seems to be indicating that from a world where we were looking at a very ugly kind of a global setup, which was China, crisis in Middle East, and concern around US macro data, all those three factors in a sense have taken a backseat. Now it's back to US election buzz. Now it is back to which market looks good in terms of emerging market valuations, how essentially the entire US earning season will also move, because unka bhi earning season hai, right? So those are the factors which are occupying center stage. So you are more of the same. But the difference between India and global market is that global markets and the markets which really matter, they've made a new lifetime high. Earlier this year, India was, it was only Nasdaq and Indian Nifty which was making a new high. But now a lot of other markets also making a new high ahead of us.
Oh yeah, absolutely. Just very quickly, in the meantime, when you talk about the global setup, you've had crude, which continues to be in focus. The US crude oil inventories have unexpectedly seen a bit of a fall. Brent has been steady near that 2-week low of $74 to a barrel. Gold, though, has extended its strong momentum. The 10-year yield, that's staying around that 4% mark. And the dollar index also has been steady at that 2-month high. But yeah, our markets, they continue ranged, though we've been sort of grinding lower.
Well, yes, and that range is something that should come up for you on the screen. If you look at the last 10-15 sessions, there's that, lower end of the market, which is 24,900, and the upper end of the market, which is 25,100 thereabouts. And we have been just in that narrow range for the past many, many days. In fact, if you look at the start of the month, there was that volatility of almost 400, 500 points that used to come on an intraday basis. That's also come down very sharply. Now we move in a very narrow range of almost 100, 200 points. And I say that's narrow because, of course, the overall Nifty size has increased quite a bit. So 200 points is just penny change for that one. But overall for the markets, we have seen that the Nifty declined a bit yesterday for the second straight day. It's been hovering around the 50-day moving average for the last 9 sessions itself. In fact, it's the broader markets which has managed to outperform a smidge. And I say that because Nifty small cap index managed to advance for 7th session, and the mid cap session, however, mid cap index, however, snapped the 3-day gaining streak, that is. But overall, still there is some more vibrancy when it comes to the broader end of the market and the small cap, because Nifty otherwise, Nikunj, is not giving you that trading opportunity, and I'm sure traders will be bored of this market.
This is called time pass, what we were saying. Yeah. Like, look at just the Nifty, 8 days, 10 days, you've just nothing. So there are two ways of looking at it. One, is this an indication that Nifty is getting jammed and rest of the market automatically will start coming under pressure? Or just don't look at the Nifty and keep an independent view in terms of what is happening to small and the mid-cap stocks. Anisha just talked about this range here. Look at this range here. If we're talking about an index where global volatility has been high, there has been a lot of news adjustment, but we just seen, and this is a time when FIs have been selling, DIs have been buying, A lot of counter forces have been at play. Earning season has started. The Nifty is just doing time pass. So just imagine a line, 25,000, draw a straight line. I think the best case scenario, 1500 points up. The worst case scenario, 1500 points down. And that is the kind of market we are in. So if you're trying to chance your arm in trading in Nifty or the bank Nifty for that matter, it may not be a very gratifying experience. In the overall scheme of things, even if we consolidate, I think that's great news. Why? Because you've seen a linear rally. The complaint or the issue for Indian markets was not growth, earnings, quality of companies. It was always valuations. Valuations, they come to, valuations will start looking attractive when you do time-wise correction and one more quarter of earnings get added up. And then suddenly markets will start talking about next year. Or valuations will look attractive if we see price-wise correction. So price-wise correction in some companies has kicked in. Time-wise correction in some stocks has already started. I think we are in that kind of a market. Now, do we see a cut towards small and mid-cap stocks? I think there is a possibility for that because the momentum has not completely faded away. There is no fear, there is no resistance in participation. It is only that the quantum, momentum, volume, everything has gone down.
Oh, yeah, absolutely. And then, of course, the earnings central continues to chug along. Lots of numbers today. You'll have Nestle, Axis, Wipro, Infosys all deliver their numbers. And then Bajaj Auto, which came out with its numbers. And we'll, of course, address in the due course how brokerages are absorbing these numbers. But it's been a record high sales as well as profit for them. It's been a 9% jump in the PAT. The revenues as well have shot up about 22%. And the defining factor, I think, is that now electric and CNG form about 40% of the domestic sales. But the question really is whether all this positivity is already baked into the stock price or not, because Bajaj has really sort of overtaken all the other two-wheeler auto peers and has been the best performing stock in the two-wheeler segment.
It's 60% this year, and that's a very massive, handsome outperformance for any stock in any market. It's trading at 30 times. So these numbers do not warrant an upgrade, but these numbers do warrant that the long-term fundamental picture for Bajaj Auto, I think that remains intact. So with these numbers, you may see a nick here, there, 2-3% adjustment, that's about it. But the underlying commentary, what I was reading in a Jeffries note and what I was reading in, where's the other note? Yeah, there you go. It is, I think, Macquarie. The gross margin may disappoint, but the fact that in the near term, the CNG, the export, everything is moving along, that means the downside will get restricted. So the best of the gains in the near term, that's behind us in Bajaj Auto. But in terms of key takeaway, the key takeaway is that if you want to buy into the stock now, you'll have to wait for a bad patch rather than really chasing the stock, because after a 70% move with this kind of a numbers and 30 times for a cyclical business, it may not be the best time to buy. But if you can hold on with a 15-20% volatility, it is not going to be more than that because it's a serious cash generation company. You should then hold on to it.
Okay. There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.